Up next, we check in on the latest happenings in the markets, and joining the show this week is Darren Newsom with Bar Chart. Here's our conversation from Wednesday afternoon. Darren, it's good to see you. Thanks for joining us.
I appreciate you having me on again, Bryce.
Absolutely. Well, we look at the markets and we can say unchanged, not a lot happening as kind of we, you and I visit here in the midweek. Whatever is happening in the markets, big picture when it comes to corn, soybeans, and even wheat, it's not really going in the upward trajectory at this point, is it, Darren?
Now, what we've seen here early in August is that, if we're looking at Dees corn and Nov soybeans, both markets have extended the long-term downtrends on the respective monthly charts. What's really been tanking is soybeans. We've had some good weather here in early August across the plains and Midwest. The heat died down a little bit, and we've seen more precipitation. So, that's just kind of a recipe to drop these markets. And now, where we find ourselves is that both the 24 issues, both the 2024 contracts, are testing those synthetic floors established by the spring-based price, U.S. government spring-based price. Corn 466, soybeans, whatever that was. Now we have the 85% levels, the synthetic floors coming in. 396 on corn and 981 on November soybeans. Both contracts have been below those. Corn's bounced back above. Soybeans look like they could come back, possibly. So it's interesting. It'll be interesting to see how we play these contracts out the next couple of weeks.
Yeah, Darren, we kind of talk about whether for good reason, we'll keep their eyes on and pay attention to what's happening. The weather pattern, as you look across the Corn Belt, compare that to the drought monitor, it looks like a pretty darn good crop for corn and soybeans out across the region, right?
Yeah, that's what I'm hearing from most folks, not everybody, but from most folks. The corn crop looks good right now. Soybean crop, for where we are in the season, it looks good as well. And we can also see this in the markets. I mean, again, we go back to the idea of both, Nova beans and Dees corn have been under a great deal of pressure. This is because, traders don't see anything to be worried about. We're seeing the carry in the future spreads strengthen. So, there's just no concern in these markets right now. If we're going to see some non-commercial shortcoming, particularly in the soybeans, it's going to have to come from some sort of weather change.
Let's talk about the future spread. You brought that up. Walk me through what you watch closely when it comes to that spread and how you can apply that to what might be happening in the markets.
Yeah, the easiest way to look at it is, when we start talking about new crop in the corn markets, we've got the Dees March, May, and May, July corn spreads. And so we can look at all of those and see, the stronger the deferred are, the stronger the carry in the market, which means the more, the higher price the deferred issues are in relation to the nearby. That tells you that the commercial side's growing more bearish than the market. They're just not willing to pay up. So they're willing to pay you more. At least it looks like it's willing to pay more down the road, but it's just more of the carry that's already in the market. So that tells us that they're bearish. That right now, when we look at the December contract and the December spreads, it's telling us they're very comfortable with what 2024 production could be. A similar situation in the soybeans as we look at Nov, Jan, March, and so on. The difference here, though, is when we get out to the May, July spreads, more so in soybeans and corn, because that's the key Brazilian spread. That's where we get a better read on what the Brazilian crop might look like. And right now, both corn and soybeans, they're still a little bit more bullish than they are for the U.S. markets in those nearby spreads.
Darren, let's talk about demand, particularly for soybeans. This is we're getting into the time where a lot of boats should be loaded up and headed outside of the U.S. with U.S. beans. Are we seeing that happen?
Not to a great deal. No, we're going to come up well short of last year's shipments. We'll get the next round of weekly export sales and shipments, and then we'll move on into next week. We've seen some announcements in the mornings. Not a great deal, but we've seen some, and it makes sense. I mean, we've got the cash market incredibly low, the lowest that we've seen the national soybean index since August 2020. So there's going to be some blue light special buying of soybeans. But the problem is we shot ourselves in the foot. We took ourselves out of the global game with ridiculous trade wars and tariffs, and we haven't gotten back in. I mean, we're still sitting on the sidelines. We're still a secondary player. And until that changes, and I don't see it changing anytime soon, but until that changes, it's going to be very difficult to rebuild the demand in the soybean market.
For the farmers watching this program here on the weekend, you open up the markets and it might be challenging to look at that, but are there some opportunities that you can see?
I think there could be. Again, if we go back to those synthetic floors and we start to get, we start to find some buying in here, some short covering or whatever the case might be, this could lead us to a rally. And oddly enough, December corn is still in position to possibly establish or complete a bullish reversal on its long-term monthly chart. So, I mean, it's not like everything's said and done. It's all going to be over. It's never going to come back. These markets will change direction. It's just from what price. And again, corn is testing its area between $3.95 and $4. It likes round numbers, so we'll see. Particularly if it can close the week above four and possibly build from there. There's a long way to go till the end of the month, but right now it is showing that there is some buying down here in the upper 390s, low fours.
All right, with the short remaining time we have, Darren, big picture question here. What about the next 6 months? What are you watching?
Next 6 months, probably going to continue to watch, no beans and D's corn. I think that's going to be important because certainly going to watch the spreads to see how we come out of this harvest. And we also have to, we know that the next U.S. election is going to be coming around, but we also have to keep a close eye on what's going on with the U.S. stock markets. They were threatening to roll over into long-term downtrends at the end of July. So we'll see if anything comes of that.